of TDS, Sri Meghna Chauhan Garu and his team, to enlighten us on the TDS of TCS new provisions and all these things. I welcome all of you and the participants also. Now I welcome our President Garu, Sri Anil Agarwal, to give his welcome address.
Good morning. It gives me great pleasure to extend warm welcome to our Commissioner of Income Tax TDS, Sri K. Meghna Chauhan ji, Srimati Aditi Goyal, IRS Joint Commissioner of Income Tax TDS Range 1, Sri P. Krishna Kumar, IRS Joint Commissioner of Income Tax OSD TDS Circle 1, Dr. P. Sudhakar Nayak, IRS Deputy Commissioner of Income Tax TDS Circle 21 Hyderabad, Chair of our Direct Taxes Committee, CA Hari Govind Prasad, Co-Chair, Managing Committee members, past presidents, and all the distinguished participants. I welcome you all to this important session. And it gives me immense pleasure to welcome Sri K. Meghna Chauhan ji, along with his senior officers of the department. In spite of his busy schedule, he has agreed to address our participants and clear the doubts regarding TDS provisions. First of all, let me congratulate department for registering a growth of 20.33% in direct taxes collection during the financial year 2022-23. Sir, it is commendable achievement. Compliance with tax laws is the shared responsibility of the taxpayer and tax collector. Nevertheless, a tax system can be effective only if it can systematically obtain voluntary compliance with the tax laws by assessees. It is often noticed that large number of grievances can be resolved with mutual discussions, and regular meetings can help a lot in creating awareness among taxpayers. In this context, Federation requested the department to constitute grievances resolution committee for mutual advantage. This webinar provides insights into TDS and TCS changes inserted by the Finance Act 2023, particularly TDS on income from online gaming, clarification for tax deductibility on perquisites, enhanced TDS rate on certain remittance made outside India, etc. This is a perfect platform for assessees to put their grievances and get clarification from the department. At the same time, the department can get feedback from assessees for improvement in its functioning. I hope this interaction will be a fruitful interaction, and I request all the participants to clear all their doubts, and if any doubts are still pending, they can write to us and we will forward all the grievances to the department. So I now request our chair of the Direct Taxes Committee, Sri Hari Govind Prasad ji, to give his introductory remarks. Thank you, sir.
So good morning to everyone. It is very, very welcoming when we approached Commissioner TDS, Sri Meghna Chauhan ji. He immediately agreed, yes, definitely we are supposed to make awareness, because the government move is moving from compliances voluntarily. And the results are also showing that advanced tax has shifted from and taken the place in the form of TDS. Earlier, the TDS was supposed to be only on income or receipt or something like that. Now, with every budget, we are noticing that the budget is increasing the scope and extension of the tax in the form of TDS as well as TCS, even in respect of sale, purchase, cash withdrawals, perquisites, LRS, virtual digital assets. And so also when so many technologies are happening, compliance is also, both the ends have certain issues still persist, which needs to be addressed. As our president also said, earlier CCIT Atul Pranay has agreed that he will have an interaction with the Federation on receipt of several grievances or queries on a quarterly basis, which I again request, sir, we can have it for clarification, which can be done at our CCIT level, which will be very helpful, and FTCCI will be very happy to do it. Further to this, the several issues which have come in respect of the tax deductions which have come up. Now, several provisions have been in the form of late fees, penalty, interest on the deductor as well as. But when it comes to the buyer also in respect of properties and several mismatches which are happening even on a small amounts, when the several deductions are there numbering from 1 to 5, just for one mismatch, the whole TDS amount is not being given credit. And there are several cases wherein the TDS defect deducted is not being reflected into 26 AS, which is now AIS, because of several agencies and stakeholders being involved into it, right from government agencies, government deductors, bankers, financial institutions, shareholders, and everything which have been brought into AIS. So it is a huge task. And the due dates which are fast approaching for individuals are 31st July, whereas the uploading of the TDS and the other things in the AIS itself will take June 7th to June 15th itself. So very short time will be there for matching and taking credits. If TDS has occurred in the next year, I'm constrained to offer the income based on my records. But the TDS is coming in the next year. And in several occasions, in various cases, TDS occurs in 1 year. My friend will enlighten on in respect of installment payments of property, which I am being the purchaser, I am supposed to deduct and remit. Suppose tomorrow the transaction cancels, what happens to it? So, and if transactions go through, it takes 2-3 years, which in detail my friend will take into account. But I have 4 or 5 issues, and 3 issues we have forwarded to you, sir, also. One is that migration of the bank's IFSC codes. In fact, our FTCCI has been served with a notice for short deduction, etc. When we approached and just for the sake of taking the name, I'm taking Andhra Bank as an example, sir, because they have merged. Several banks have merged like that. So 2012, 13, 14, 15 has been deducted, short or long, whatever or correct. What differences? Now they don't have a TAN. They have merged with them. They don't have the back office, but we have the proper challenge or the things which have been deducted. So we are unable, we have written to the old bank and the new bank, but they are unable to do it. Several are such instances where employees also has been deducted from their salaries and other interests, but it has not reflected into 26 years. Now their further refunds have been held up or adjusted, whereas, and in respect of purchase of properties, the deductor has vanished or closed, or companies are closed because of several reasons, but though they have not filed, though deducted, but they have been sent with the recovery notices. But they have the proof of deduction, payment, everything is there. So for such and more, sir, I have one more issue in respect of this new tax regime and old tax regime. For senior citizens, like in 2019, for rental income, it was increased from 1,80,000 to 2,40,000, sir. But even today, 3 lakhs is the minimum most, which is the exemption, and 5 lakhs and 7 lakhs is the case. When their case is not falling into the tax liability and they're not supposed to file the return, but TDS is happening because the moment they are crossing 2,40,000. Suppose I'm taking example of 20,000 plus 21,000, sir. The additional income per annum is 12,000, but the tax being deducted for that senior citizen who is not supposed to the file return is 25,000. He's supposed to file a return and wait for a year or so. So similar are the several cases, sir. So I request that there should be a rejig or revisit from your end also for addressing such issues. There are several issues, and I don't want to stand in between. There are more than 250 participants who has registered and joining here, and many experts are there from the department. So it is heartening to listen from the department itself to what are the provisions and how they can facilitate through FTCCI the interest of the government as well as revenue as well as the stakeholders who are giving the taxes very voluntarily, honestly, sir. So I take my this warning, Shramam, sir. Thank you. So over to Madam.
Thank you very much, sir. Now I request our co-chairman, Dikshit Hemendra Shah, to introduce the Commissioner Garu to the participants.
Good afternoon to all the participants, and welcome to the webinar. It is my privilege to introduce Commissioner of Income Tax, Shri Meghnath Chauhan ji. He is a very pleasant personality and a leader who appreciates teamwork. As I introduce him in detail, you will appreciate this adjective suits him well. Before joining IRS, he worked as Municipal Commissioner for Urban Local Bodies in state of Andhra Pradesh. His domain of work is development and maintenance of urban infrastructure, health, education, sanitation, and various approvals, etc. Also served as District Project Officer for District Urban Development Authority. As a DPO, among various development activities, he was involved in formation of a lot of self-help groups. His work experience in IRS: during the foundation course at Mussoorie, he was voted and selected by probationary officers for Esprit de Corps Award, which signifies brotherhood, cooperation, and leadership among probationers. He was voted as most pleasant personality in National Institute of Financial Management, Faridabad, had held postings in assessment, investigation, headquarters administration, etc. While holding post of Deputy Director of Income Tax Investigation, search and seizure actions was conducted on several firms and worked towards enhancing revenue to Government of India. The works have been published in Let Us Share, a publication of Income Tax Department. As a member of Headquarters Administration, he has taken active part in enhancing infrastructure and in addressing various issues of staff welfare. He has participated in international conferences and seminars on tax matters in Duke University, USA, and Seoul, South Korea. He is a guest faculty in National Academy of Direct Taxes, Nagpur. He is a speaker and motivational speaker for students and youth and in various colleges and schools. Posted at Centralized Processing Center, Bangalore, and currently posted as Commissioner Income Tax TDS, Hyderabad. He believes in teamwork and team building. With this introduction, I hand over this session to Shri Meghnad Chauhanji.
Good morning to all of you. Am I audible?
Yeah.
Yes, sir. Audible, sir.
Thank you, Nikshit, for giving a introduction of myself. And I welcome Sri Anil Agarwal ji, President of the Federation, Sri Harigovind ji, Nikshit, and all the members of the Federation who are participating today. I also welcome my colleagues, Aditi Goyal, Joint Commissioner, Krishna Kumar, Joint Commissioner, and Mr. Sudhakar, Deputy Commissioner, and other officers who are participating in the webinar. At the very outset, I would say that this entire idea of coming up with a webinar was started by Mr. Harigovind, who had visited my office and requested. Last year, we had conducted almost 80 webinars or physical interaction programs in both the states, Telangana and Andhra Pradesh put together. It has been our endeavor to reach out to the various stakeholders, deductors, taxpayers who are in major cities, as well as who are in smaller stations. So last year we had concentrated mostly in district headquarters. Our teams have visited most of the districts. With the help of the district administration, they had organized several awareness programs. As we all know, tax deduction at source is one of the main streams of revenue to the Government of India. And under direct taxes, it almost forms 50 to 55% of tax collection. Andhra Pradesh and Telangana region, both the states come under one region as far as income tax department is concerned, stands at number 6 position in the country, only after Bombay, Bangalore, Delhi, Chennai and Pune. Hyderabad is at the 6th place, and it contributes almost 6 to 7% of direct taxes. I'm also happy to mention that out of this major contribution, TDS almost forms 55%, which shows the significance of TDS tax administration. TDS, as we understand, is an activity which involves various stakeholders. Department being at the helm of administration and supervision, and also taking the responsibility of redressal of grievances of various deductors and taxpayers. In this ecosystem, we have an important segment, that is deductors, which we will speak and understand their role and responsibility in a better manner in the coming few minutes in this session. As the economy has grown leaps and bounds, as the financial activities have become complex, as there are more technological advancements, both in conduct of business, the TDS provisions and law has also evolved from time to time. Today, it not only encapsulates the entire gamut of financial activity, but also has given a spectacular platform through which deductors can file their returns, get the details of their tax payments, file rectifications, and also claim refunds through TCS portal. You all must be using this portal, TCS portal, which is a very user-friendly platform, which makes various functions which has to be carried out by the deductors easy. As I was mentioning, to capture all the financial activities, the law has grown. There are a number of provisions. Conventionally, we had TDS on contracts, TDS on rent, TDS on salary, of course. But now, as Mr. Harigovind was also mentioning, the TDS has expanded to financial activities like online gaming, virtual digital assets transactions, even on goods purchase. Earlier it was not there. On cash withdrawals, if you are withdrawing cash from a bank or a cooperative society beyond a limit, then on that particular transaction also TDS is there. What I am trying to convey is that almost each and every activity wherein the receiver is getting payment which will form part of his income. In all such activities, TDS is involved today. Having said that, we should understand the role of the deductor, who is at the center point of collection and deduction of tax. He has not only the responsibility of deducting the correct amount of tax, but he also has to record the same things in a proper manner and file the TDS statements promptly, timely, so that the deductees are the persons who have received the payment get the correct and timely credit. At this juncture, I will highlight that the role and responsibility of the deductor is very important. At the same time, when this responsibility is being given to the deductor, law has introduced certain provisions which may penalize for late filing, short deduction, and deducting but not paying into the government account, which is considered as a severe offense, and even prosecution provisions are getting attracted if the amount is deducted and kept with the deductor himself or herself, and that amount is not paid to the government account for a certain time, then such kind of activity is considered as offense, and there are prosecution provisions. As I was mentioning, the technological advancement in the department is not only providing various facilities to the deductors and deductees, but also it captures all the activity and gives us the data for our analysis. For example, if a deductor has failed to file a return tax statement, that is TDS statement in time, such kind of non-filers data is given to our division from Delhi. At the same time, if somebody pays late, if there is a due date and the payments are made beyond the due date, such late payments data is also given. These are few examples I am giving, but there is a whole lot of data which is coming to us. So unlike in old days, that where we can take some more time to file a return or make the deduction, that is absolutely not possible now. The law is clear, the due dates are clear, therefore we need to be more focused, and we should adhere to the guidelines which have been given. When I am saying so, let me also mention, while the department is monitoring all these activities, at the same time, we have been more proactive in resolving the grievances of the taxpayers and deductors. That has become an important activity. Last year, around 850 grievances were received by us. And you all will be happy to know that 95% of these grievances were resolved within 30 days. Only 5% where the data is incomplete or the activity has happened 10 years back, or the deductors are completely non-responsive. I can give an example that some of the deductors, as Mr. Hariji was telling, that they have deducted, challans also are there with the deductee, but they have not filed the return. A couple of such cases, when I personally went in deep into those cases, I found that deductors are, for various reasons, are behind the bars. They have been apprehended by certain investigative agencies, and they are therefore their companies are closed and they are not approachable by our officers. So therefore, the impression that the department is only monitoring and enforcing is partly correct, but a major portion of our time and resources are being deployed to address all the grievances which are being. Just to mention one more example, 70 to 80% of the grievances what we get are a kind of a dispute between the deductee and deducted. For example, an employee who was in X company leaves that company in mid of the year and joins Y company. Now the X company is not issuing him Form 16, or they have not filed the TDS statement in which the employee has to figure. And then he comes to the department. In all the right earnest, though the 70% of the cases are disputes between the deductee and deductor, prima facie, neither at the time of the activity happening in the real time, nor at the closure of the year, department is not a party to this. But however, to give best services to the deductee, that is a taxpayer, we issue letter to the deductor, see that he complies to that. And the problem of the deductee is resolved, that is the taxpayer is resolved. Before I conclude, I also want to mention that the deductors should be very careful in filing the TDS statements. Most of the time, either the PAN number or the section being quoted or the amount which is being mentioned in the TDS return is mentioned wrongly, and therefore this causes mismatch. Now, since the major gamut of functions are carried out online through system, for every such mistake, the system has to take up that particular function, and it needs to see a large amount of data to pinpoint that particular correction and then do the required corrections. So I need to impress upon the deductors that when you file the return, that is the TDS statement returns, you need to be very, very cautious so as to see that the data which you are giving is clean and free from all errors. That will solve a lot of issues which the deductees and the taxpayers are facing. As highlighted by our earlier speakers, there are various amendments which have come in last 2-3 years. And as you all know, some more clarifications are coming this year. 2 days back, we had received clarifications on TCS on foreign remittances. And yesterday we had received circular clarifying the modus of taxing the online gaming. There were certain concerns on whether gross winning has to be taxed or net winnings has to be taxed. So my colleagues, Mr. Krishna Kumar, Aditi ji, and Sudhakar will take you across certain important provisions and also certain changes which has been brought in. As we know, any one seminar or a webinar cannot resolve all the issues, but I am very happy to invite any grievances which you are having. At the end of the thing, we will give you email address that to that you can send your queries. And we will try to resolve each one of them. I will assure that whatever is the nature of the query, my officers will look into that. They will try to resolve that. And they will also help in further extending any kind of support you need in the future. With these few words, I thank the Federation, President, Chairman, and Co-Chairman of Direct Taxes Committee, and all the members who are attending today's seminar. And I request the host to carry the next part of the session. Thank you.
Sir, thank you very much, sir, for the very positive enthusiasm and remarks and words. And you have, in fact, talked from the SSC point of view and our federation point of view. You have told that given the analysis that how fast you are understanding the grievances and resolving that too in 30 days, 95% of the cases which have come to you, 850. It is really thankful to you, sir, for that good accolades. And recent amendments also, you talked about the net winnings of the other things and all, and which we are going to deliberate in the sessions. Sir, one more request our president has made that, which our CCIT has, that if quarterly, if you can, we can work together for though you are going to give us today and you are going to resolve, but if on a time bound and time and a quarterly basis, because June is starting and 31st July is the time, whatever the things are there because of the new amendments for the financial year 23-24 will be many, and we will be requiring your guidance from time to time. So I request you to kindly allot us time again in June so that we can get all the queries, and we will have to have a physical interaction with you at the chamber, sir. Thank you, sir.
Thank you very much, sir. Thank you for your wonderful presentation, and as well as the insights of the TDS provisions and all these things. Thank you. Thanks a lot, sir. Now I welcome our co-chair Nikshit Garu to introduce our speakers to the participants.
Again, it's my privilege to introduce a very dynamic IRS officer, Srimati Aditi Goyal ji. She is an engineer from Thapar University, Punjab, and she has completed her master's in business law and taxation from Nalsar. She is an IRS 2011 batch, joined National Academy of Direct Taxes in December 2011. After completion of training, she was posted in Mumbai on various assignments for 8 years as Assistant Commissioner and Deputy Commissioner of Income Tax. During this tenure, she has worked in various assessment charges in business, corporate, central charges. During the tenure in Central, she had launched 38 prosecutions in a single financial year. She was also posted as Deputy Director of Income Tax, Intelligence and Criminal Investigation, during which time she was solely responsible for completion of special project shops and establishments worked on cases relating to illicit derivatives tradings in SEBI, resulting in bogus losses, and verification of cash deposit cases during demonetization. She participated in first 1-year advanced management program in public policy from Indian School of Business. She is currently posted as Joint Commissioner of Income Tax, TDS Range 1, Hyderabad. With this introduction, I hand over the session to you, ma'am.
Good morning. Good morning, CIT sir, officers and officials from the department, members of the Federation, and all the participating members. It is very heartening to see such enthusiasm shown by the Federation and all its members to come together with the department and to enable the department to reach out to all of you in our journey of spreading awareness about the TDS provisions. As CIT sir has rightly pointed out, the tax deducted at source plays a majority role in the tax contributions to our country. It is very important that we realize that this success is not possible without the diligent participation by all of you, our TDS deductors. As our nation is poised to grow, we have already become a 3 trillion economy. Very soon, we'll become 10 trillion economy. By 2050, we are poised to become a 30 trillion economy. But as a nation, we need your help and are willing to always extend our help to you to continue this major role of TDS towards collecting tax revenues that will enable our nation to move ever forward in this direction of development. So I thank you, all of you, for coming here today, and I hand over to the next speaker. Thank you.
Thank you, madam. We also look forward for your more interaction with the FTCCI. You have rightly,
Definitely.
because you have done so many demonetization prosecutions, we have to make more awareness to the industry people that why we should not land in your hands.
Now I introduce an athlete, Sri Krishna Kumar ji, Joint Commissioner of Income Tax, Hyderabad. He is an engineer from Anna University, Chennai. He has completed his Masters in Taxation and Business Laws at Nalsar University, Hyderabad. Before joining IRS, he was software engineer with Hexaway Technologies, Chennai. Joined IRS in 2013 December and worked as Assistant Commissioner of Income Tax at Nagpur and Tirupati, Deputy Director of Income Tax at Hyderabad, Deputy Commissioner of Income Tax at Hyderabad. From Jan 23 till date, he is Joint Commissioner of Income Tax, and his interests are long distance running, swimming, and he loves playing basketball. So, sir, please take the session forward.
Thank you, Mr. Nikshit. Respected Commissioner of Income Tax, TDS Hyderabad, Shri Meghnad Chauhan sir, Joint Commissioner of Income Tax at TDS, Madam Aditi Goyal, my colleague Dr. Sudhakar Naik, and other officer colleagues, the President, Chairman, members of the Federation of Telangana Chambers of Commerce, and other enthusiastic participants. A very good morning to all of you. My Commissioner of Income Tax and Joint Commissioner of Income Tax have briefly spoken about the role of the TDS in our tax collection, the role of various stakeholders, and the importance of the directors, and how we are trying to reach out to the directors and the directees in addressing their grievances and trying to handle their difficulties in their regular process of deducting TDS and remitting to the Government of India. I will take this session along with the presentation. So I would like to take you through some important provisions of TDS that's already in existence, all those newly introduced sections, what are the process involved, what are the lapses that is seen from both from various stakeholders specifically. So we'll also try to address some of the grievances raised by the members and the participants from the chambers of commerce. I would like to share my screen with the presentation. Yeah, to begin with, I would want to talk about why there has been TDS provisions in the Income Tax Act. Why is that a government of India, or for that matter, any economy is not allowing the taxpayers to pay taxes at the end of the financial year? There are various reasons attributed, but to begin with, it is actually first point would be to reduce the burden of the taxpayers, to pay at the end of the financial year, so they can pay as and when they earn. So that is where we have kept monthly targets, quarterly targets under various provisions. So this also gives an opportunity for immediate revenue collection for the government of India in their day-to-day expenses. Secondly, TDS and TCS provisions also help in tracking the movement of the receipts income of various taxpayers in the country. So that would also help us preventing tax evasion. So, and newly introduced sections, the focus of those sections has been to widening and deepening of the tax bases, because a lot of people are not coming in the tax bracket just because there were no TDS components under salary, contracts, or any other activities. So, but they have been involved in doing a lot of expenses, making huge purchases. So those were not captured earlier. Now, under various TDS and TCS provisions, they are trying to capture those data, so thereby trying to expand the tax base of the country. So, to begin with, who are the stakeholders in TDS? Of course, apart from IT department, the main participants are the directors. Directors are the people, whenever they are making the payment, they have to deduct TDS at the applicable rates. So we will see through the various provisions for different business activities. Second comes the deductee, payee, the taxpayer, who have to pay the tax. They have to pay it upfront through the deductor to the government of India. The next stakeholder is banks and financial institutions. So they are intermediary between the government of India and the deductors. So deductors through the banks and financial institutions remit the tax to the government of India. So NSDL, TIN-FC, they are the facilitators for the deductors and deductee to helping them obtain PAN, providing them the portal for making payments, other supporting activities. IT department, of course, at the helm of tax administration. Then CPC, TDS, and traces. They are actually the arm of IT department who takes care of processing all those TDS and TCS return filed by the director and giving appropriate credit to the respective taxpayers. I'll take you through some of the important provisions that are applicable for the taxpayers. To begin with, TDS on salary. This is one of the major components under TDS, contributing to nearly more than 45% of our TDS collection comes from TDS on salary. So that plays an important role. So I would like to deal little detail here on this section. Section 192 covers TDS on salary. So who all needs to pay or suffer TDS on those salaries? All those employees who receive salary and when their salary is more than exemption limit, TDS on salary will be applicable on them. Who will be responsible or the director? All those employers who pay salary or wages will be responsible and act as a directors in this for this particular section. So when is that TDS has to be deducted? Whenever salary is paid. So important aspect here is that we have noticed, of course, like private and government are treating TDS on salary under section 192 differently. Private, we are noticing that they are cumulatively calculating the salary for the year and appropriating for the 12 months and deducting the TDS every month. So that is how it needs to be paid. Department has come out with a circular that comes out regularly every year. And of late, we have come out with a circular number 24 of 2022, 7th December 2022. So that gives the detailed provisions of how directors needs to deduct TDS on the salary. What are the TDS rates as per the applicable slab rates? Now, there may be doubts about what are the various components under salary. So we need to see that all pay, allowances and perquisites also needs to be included as part of salary. So what are the basic limits? So I'm talking about the basic limits for every taxpayer. To start with, it is 2.5 lakhs. Yes, of course, senior citizens and various categories of taxpayers, there are various limits going from 2.5 lakhs and above. Here, I would talk about new and old tax regime. Of course, old tax regime, the basic limit starts from 3 lakhs and above. So a director needs to take an appropriate, communication from the director's employees that whether they want to follow old or new tax regime and calculate the total TDS for the year and start deducting from the month of April onwards. As I said, CBDT is giving circular every year. The latest circular being circular number 24 of 2022. So here, what are the procedures for the employers to be followed while deducting the TDS has been given in detail. So I would request the directors also to make note of the circular number and go through. If there is any clarification, they can also reach out to us. We would be happy to clarify those. Next will be TDS on rental provisions, rental payments. So to whom is it applicable? The person who receives the rental income. So now here there is a classification between individuals and HUF, and the other side will be the commercial establishments, business activities. So at what time is that TDS applicable? Whenever there is any credit or payment, whichever is earlier. So here for the commercial and other business establishments, there are two rates, 194 IA and 194 IB. 194 IA covers TDS on plant and machinery. So whenever they are taking plant and machinery for rent and making payments, they have to deduct TDS at 2%. Whenever they taking land, building or furniture for rent and making payments, they have to deduct at 10%. So there is a threshold limit of 2.4 lakhs per annum. If the payment is over and above 2.4 lakhs per annum, the above TDS applicable rates, TDS rates are applicable. If there is no PAN, if the deductee is not giving the PAN, then tax has to be deducted at 20%. Coming to individuals and HUF, who takes rent, properties for rent. So all those individuals who are not liable for tax audit is not covered under 194 IA. So all those who are liable for tax audit, they need to follow this particular provision, 194 IB. So similarly, at the time of credit or payment, they need to apply these provisions and deduct TDS. Basic threshold limit is 50,000 and above per month. If they are making payments of more than 50,000, TDS rates of 5% is applicable. Again, when deductee is not, furnishing the PAN, they need to be deducted at 20%. The third important provision is TDS on contracts. 194C. This is another big contribution to the TDS collections. Here, who are the deductors? All the various categories of assessee, which include central state government, local bodies, corporates, trusts, individual HUF professionals. It is applicable for everybody. Everyone will act as a deductor under this case. It is applied to whom? It is applied to a contractor who executes works on contract basis. There is a catch for individuals and HUF when their individuals and HUF who are undertaking business activities, when their turnover exceeds 1 crore, 194 section is applicable for them. Again, individuals and HUF who are in professional activities, when their turnover exceeds 50 lakhs and above, 194C applies as a deductor. So when is the TDS needs to be deducted? Again, at the time of payment or credit, whichever is earlier. So what are the TDS rates applicable? When making payment to individuals and HUF, it has to be deducted at the rate of 1%, and making to other categories of assessees, it is 2% of contract value. Again, when there is no PAN, it has to be deducted at 20%. So, is there a threshold limit? Yes. Whenever you are making a single payment of more than 30,000, so you need to apply section 194C. Then aggregate payment of more than 1 lakh during the year, then again 194C comes into play. Here, a TDS on professional technical services. Similar to TDS on contracts, all those who are making payments as professional fee or fee for technical service remuneration, and royalties also. Who is the person, who suffers this TDS? All those professionals who are into medical, legal, technical, consultancy services. So when is it applicable? Again, at the time of payment or credit, whichever is earlier. Here the TDS rates are a little complex. Normal and wide category of people who are involved into professional technical services, they suffer 10% of TDS rates. But specifically, the Act gives for 2-3 categories of technical and professional services where it is to be deducted at 2%. So all those who are engaged in the business of operation of call centers, TDS is applicable at 2%. Then fee for technical services not being a professional services, that also comes under 2% category. If there is no PAN case, again 20%. This is applicable commonly across all provisions. So do we have a threshold limit? Yes, it is 30,000 per annum. So I would like to give you what all comes under professional services where 10% is applicable to them. So all those services like medical, legal, engineering, architectural, technical consultancy, advertising, accountancy, etc. All these professionals will have to suffer TDS at 10%. Next is 194A, TDS on interest payments. There are 2 categories: TDS on interest payments of bank deposits and TDS on interest on securities. TDS on interest on securities, 193 is covering that. 194A covers all those interest on deposits with the banks and the financial institutions. So 194A is people who receives interest other than interest on securities. So who are the people who have to deduct TDS here? Here, companies, cooperative banks, other financial institutions. Even individuals who are taking loan and making payment of interest, again, they also will be a deductor, but their turnover has to increase more than 1 crore for business activities. All those professionals, turnover has to be more than 50 lakhs. So what is the time at which the TDS is being deducted? At either at the credit or payment of interest, whichever is earlier. So what is the TDS rates? TDS rates are at 10% whenever making a payment or credit of the interest component. An open case will be means that tax will be deducted at 20%. So what are the basic limits in these cases? whenever a payment is made by the banks, cooperative societies, and post banks over and above 40,000 per annum, so TDS will be applicable. Below that, it will be excluded. And other cases, any payments more than 5,000 per year, this section 194A will be applicable. 194H. These are commission payments. So whenever there is a payment of commission or brokerage, the director has to deduct TDS. Again, here all categories of assessee, including individuals and HUF involved in business and professional activities, need to deduct TDS. So what is the rate? It is 5%. The threshold limit is 15,000 per annum. Again, no PAN cases, 20% has to be deducted. 194H TDS on commission. Now, TDS on purchase of goods. This is one of the newly introduced provision. Last few years, this provisions has been introduced. So, where is it applicable? When there is a purchase of goods exceeding 50 lakhs. Whenever you make a purchase of goods, value more than 50 lakhs, 194Q is applicable. What is the rate? 0.1% on the amount exceeding 50 lakhs. So when the seller is not having PAN, then you have to do it at 5%. So who is qualified as a buyer? A buyer is one who has shown a turnover of more than 10 crores in the preceding financial year. He will be qualified as a buyer. So whenever a buyer makes purchase of more than 50 lakhs, he has to deduct TDS at 0.1%. No PAN case, 5% is applicable. Here I would like to distinguish between the section 194Q and section 206C 1H. 206C is not TDS, it is tax collection at source. Here, as a buyer becomes deductor, there in the case of 206 1H, seller while making sale of goods more than 50 lakhs, he has to collect tax at source. So when both these sections are contra and come into play for a particular transactions, 194Q prevails. So circular CVDT circular number 20 of 21 gives a detailed explanation. So when both these section comes into play for a particular any questions on that? We'll be taking subsequently. Now, yeah.
Sir, in respect of rent,
yeah,
and other issues we will have, what I am suggesting is that after completion of our presentation,
Right.
everybody is expected to note down their queries, and in the after presentation we will take all the questions.
Yes, that will be appropriate. Thank you. Section 194. This TDS on cash withdrawals, which also has been very lately. You know, at the time of introduction, government has given various reasons for introduction of this section. This is one of the reason to promote, you know, digital transaction rather than, you know, withdrawing cash transactions, to prevent, you know, tax evasion, to minimize the cash economy. This section discourages cash and it promotes digital economy. So with this, like a lot of digital transactions has come into play for purchase and sale of transactions, sale of various goods and services. So to whom it is applicable? All categories of assessees. What is the threshold? If the withdrawal is more than 1 crore, rate of deduction is 2%. Budget 2023 has introduced an amendment to this section, giving an exemption up to 3 crore for the cooperative societies when cooperative societies are withdrawing the cash. So what is the rate of deduction? 2% to be deducted when the amount withdrawn is more than 1 crore and above. TDS is applicable only on the excess of 1 crore. In case of, suppose the person who is withdrawing the cash is a non-filer. So when the in those cases, this section 194 is applicable when the withdrawal is more than 20 lakhs. For all those non-filers, the rate is also different. When the withdrawal is more than 1 crore, it has to be deducted at 5% rather than at 2%. 194R, TDS on perquisites. Again, this is a recently introduced section. So this section is applicable whenever there is a benefits or perquisite given in cash or kind to the beneficiary. For whom this section is applicable, it is applicable for all those people involved in business activities and professional services. So when is that tax has to be deducted? Whenever benefit or perquisite is given to the beneficiary, the tax has to be deducted. So what is the rate? 10% on the benefits or aggregate benefits when it is more than 20,000. Government has come up with two circulars, circular number 12 of 2022 and circular number 18 of 2022. We have given a lot of situations, analyzed a lot of cases. Government tried to give out all those clarification in the form of frequently asked questions. So I would like all those participants to make note of this circular and get acquainted with the various situations under which 194R has to be applied. Next, 194O. So TDS that needs to be made by the e-commerce platforms or operators on the e-commerce participants. So this was introduced in budget 2020, effective from 1st October 2020. So whenever e-commerce operators makes payment to the e-commerce participants, TDS at the rate of 1% has to be deducted. Means like whenever the e-commerce participants makes a sale of goods or services and for which the payment is made through the e-commerce operators, the TDS at the rate of 1% is deducted. Again, when the deductee is not having any PAN, tax rate is applicable at 5%. Since e-commerce platform has grown leaps and bounds in the last few years, where most of the purchase and sales are happening in this platform, and to bring all those people who are acting as e-commerce participants in the platforms, this provision has been introduced to increase the tax base. I would like to take you through some important provisions that has been amended in the recent budget. As we spoke at under 194N, the threshold has been increased from 1 crore to 3 crore in case of cooperative societies when they are making cash withdrawals. Next provision is TCS on foreign remittances. This earlier it has been at 5%. All those foreign remittances for tour operators travels and making any investment purchases of real estate securities abroad, the TCS has been increased from 5 to 20%. So section 155 also has been amended to solve the TDS mismatch. TDS mismatch is one of the difficult, or I would say important grievance that is affecting all the taxpayers. So TDS would be directed at in 1 year, and the income would be offered in other year where you will not be able to make claim of the TDS. So this particular section provide an opportunity for the assessee to make an application with the assessing officer regarding the TDS claims, and the assessing officer would revisit the assessment and try to give you the credit for the TDS. This is amended to make the process of claiming the TDS easier for the taxpayers. Then section amendment is to section 194 or 194B, introducing a new provision under 194BA, taxing on the net winnings from the online gaming without any threshold. Earlier, for online games along with horse races, betting, etc., the threshold was 10,000 rupees. Now it is on net winnings from the online gaming without any threshold. Whatever is the winnings, it is calculated at the net rate over and above whatever is the expenses. TDS has to be applied on that. Section 194BA. In fact, yesterday there has been a circular by the CBDT, circular number 5 of 2023, dated 22/5/2023. So redactors may please take note of the circular. Again, board has come out with the frequently asked questions taking into various situations and circumstances under which section 194BA is applicable. Next amendment that was brought in during this budget 23 is 190 amendments to section 192A, where the PF withdrawal in non-PAN cases, TDS has to be deducted at 20% and not at maximum marginal rate. Earlier, it was deducted at maximum marginal rate. Now, all those non-PAN cases, 20% blanket has been applied. So now, I think I have gone through some of the important provisions that is applicable for all those deductors and deductees. There are many such provisions which are like not very significant, but if any questions or any clarifications under that particular section is there, we'll be happy to take it at the end. Now I'll briefly take you through the process involved in the deduction of TDS and remittances. So a deductor is at the forefront who needs to apply all those various provisions whenever the transaction takes place. They deduct TDS, then they have to remit it to the central government. There is a time limit for it. Every month, every following month, 7th of every following month, they have to remit the TDS except for the month of April, where the time limit is given up to April 30th. So upon making payment, they need to file TDS return. You have to do it quarterly. There is also a time bound for that. Once they file the TDS return, they need to download the form 16 or 16A and hand it over to the deductee. These are the responsibilities of a deductor. Now, when to deduct? All provisions except 192B, it is at the time of credit of the payee or at the payment or accrual, whichever is earlier. So the earliest time, like either you make payment or credit, or you are making an accrual system of accounting, whichever is earlier, you need to deduct at that time. So what is the due date for payment? As I said, it is 7th of the ensuing month. And for the month of March, TDS has to be paid on or before 30th of April. What is the due date for filing their TDS return? Every quarterly they have to file. So for first quarter, it is 31st July, second quarter, 31st October, third quarter, it is 31st January. For fourth quarter, after making payment on or before 30th April, they have to file the return before 31st of May. So how do you, go about filing the TDS return? So we have a TCS portal. You need to start preparing your return under the TCS portal. It will be validated and then you will furnish, after which we'll process and furnish you an intimation. So filing of returns, there are two important components. One is like timely filing. As I have given you the due dates, you need to follow, all those deductors need to follow those timelines, and filing of correct returns, wherein deductor is responsible in giving the data under the TDS return with the proper details of the deductee. So any mistakes while filing the TDS return will create trouble for the deductee in getting the credits. So that is how most of the grievances are arising. So deductor has a big responsibility to file the TDS returns in time and correct returns. So what are the different forms that needs to be used while filing TDS return? For all those TDS deducted under salary, you need to file form 24Q. For all those payments apart from salary, all those non-salary payments, you need to file a TDS return under form 26Q. So whenever there is TDS on property transactions, forms 26QB needs to be used. So whenever there is a foreign transactions, it means payment payment to a non-resident other than a salary, you need to issue form 27Q. You need to file it under form 27Q. So once the return is filed, the department CPC takes up for processing. When there is no defaults in your filing. When the TDS has been deducted at the applicable rates, returns will be processed and it will be closed. So when there is a default, there are various defaults under this category. So an intimation will be sent to you containing the details of the defaults. So what is the intimation under 200A is the intimation that you will receive from the CPC or department once the TDS return has been filed. So when there is any default, intimation will come along with the demand notice. You can go through the intimation, and if the statement, if the TDS statement has been filed without any error, there will be no demand notice. But if there is a demand notice, the director is allowed to go through the TDS returns that they have filed and make corrections if there is any error. So otherwise, if there is no error and demand has been there, so the director has to make the payment within 30 days time. So as I was referring to filing of correct TDS returns, I would like to emphasize here on why I was trying to tell you what is that filing of correct TDS returns. Mismatch is one of the grievance that we receive very often from the deductees. Why it happens? Various reasons, and one of the main reasons is like deductor filing a defective TDS statement every quarterly. So when they are making errors in the TDS return, TDS credits will not be given to the deductees. So that is the reason, like majority of grievances is getting arised from the deductee side. So deductor needs to be very careful while filing the statement to avoiding any factual or clerical errors. So what are the regular defaults that is seen? So once the TDS returns are filed, the CPC takes up for processing, and under the processing, if there is no defaults, the return is processed and intimation is sent to the directors. But there are various defaults that is seen from the director side. Short deduction. So as we have seen in various provisions, what are the applicable rates, threshold limits, etc. So when director does not follow all those provisions, it would result in short deduction, because of which there will be a demand for the deductor. Non-deduction. So at places where these provisions are applicable, director may or may not have applied that particular provision, resulting in non-deduction. Non-remittances, after deducting, if you are not paying it into a central government account, it becomes non-remittance. Again, non-remittance happens when you are not making payment in due time. So interest will be applicable on this late remittances as well. Short payment. So you have deducted a particular amount and you have not remitted entirely into the central government account, so results in short payment. Delay in filing ETDS return. You have a timeline to file the TDS return every quarterly. So when you are falling short of filing the TDS return in time, so it will result in delay. All these defaults will directly affect the deductees, wherein they will not be able to get the credit for whatever TDS that you have deducted. So this is a screenshot of how is that intimation from CPC would come. As you can see, what are the different types of defaults: short payment, short deduction, etc. So based upon the default, so the CPC itself will calculate what is the default amount. When you see that you have made a genuine error while filing TDS return, you can go back, make a rectification or correcting the TDS return. Then again, it will be processed and all this default amount will be reduced. Otherwise, if you find the default is genuine, then you have to go ahead and make the payment as per the demand notice. After filing the TDS return, directors also have the responsibility to download two different forms, form number 16 and form number 16A. For form number 16, for all those salaried deductees, you need to deduct it once in a year within 15th June of the following year. And for Form 16A, all those non-salary deductions, you have to deduct it quarterly and has to be given within 15 days from the last date of filing your quarterly statement. So this is again a responsibility of the deductor. What happens when there is a delay in filing your ETDS return? Section 234E comes into play. You will be charged late filing fee of rupees 200 per day from the due date till the date of filing. So again, once you, as we see in the previous slides, in the default summary, again, late filing fee, you can see item number 5, late filing fee under 234E will come here. Calculated at 200 rupees per day from the due date till the date of filing. Deduction without PAN, non-PAN cases, I have mentioned it earlier. So maximum applicable rate is 20% or the rates at force. So what are the various irregularities, lapses observed from the deductor side? Non-deduction. So a particular section may not have been applied for specific transactions, resulting in non-deduction. Non-remittance of TDS to the central government account. Despite making deductions, the deductors do not make the payment to the central government account within the timeline specified. So not calculating paying interest. So whenever there is a late payment, there will be an applicable interest for the deductors. They need to calculate the interest for the late payment. They need to make the payment immediately along with the TDS amount. Not filing or late filing of TDS quarterly statement. Again, we have timelines for filing TDS quarterly statement. Every quarter you need to file it. And if you are not filing or making a late filing, again, late filing fees will be applicable on that. Not revising the quarterly statement in case where demand is not correct. So once the TDS return is processed, you will be getting an intimation, giving what are the defaults and the demands for those defaults. If you find that defaults are not correct, you go ahead with rectifying the TDS returns. Sometimes despite getting the intimation with all the defaults, directors fail to revise the quarterly return, because of which deductee again will be suffering to get the TDS credits. Not tagging of challan in case where demand is genuine and also paid by the deductor. So many times deductor would make the payment, but they fail to tag the challan appropriately for whatever is the default or whatever is the regular payment. So if that payment has been made and not tagged, the credit will again be not given to the deductees. Now we have seen quite a few of the defaults. What are the defaults that we have seen is non-deduction, short deduction, non-remittance, late remittance, and similar defaults that we have seen. So what are the consequences for all those defaults? Yes, Act provides for penalty, interest, and prosecution, depending upon the defaults. To begin with, penalty is there under section 271C and CA. So when you fail to deduct or collect the TDS and TCS, so 271C and 271CA, wherever non-deduction or short deduction is there, 271C and 271CA will be applicable. 271H, when you fail to submit the quarterly return or fail to issue the TDS certificates, in all those cases, 271H will be applicable. This is a regress provision where TDS has been deducted and not remitted into the government account. 276B and 276BB is applicable, punishable with the regress imprisonment for minimum of 3 months and maximum of 7 years, along with the fine. I would like to reiterate the obligations of the deductor. Deductor has to deduct and deposit the TDS into the government account, file quarterly statement, issue TDS certificates to the deductees. When they fail to do any of this, they will fall under the default category. So this all comes as a part of TDS. So now comes the TCS, tax collection at source. Section 206 of the Income Tax Act deals with the TCS, tax collection at source. It's tax collected by the seller from the buyer while making sale of goods and services. So this has been introduced to prevent large scale tax evasion. Again, I will come back. So what are the goods covered under 206C and the rates applicable? There are different goods and the different rates under section 206C. So some of the important provisions is item number 8, sale of motor vehicles of value exceeding 10 lakhs. So whenever a seller makes a sale of vehicle, the value of which is more than 10 lakhs, 1% TCS is applicable. Item number 10, TCS on sale of goods. This was recently introduced. Applicable rate is 0.1%. This is where is contra to 194Q, 206C1H versus 194Q. We have discussed already. If there is any clarifications, we'll take further questions on that. Similar to TDS, TCS also has set process where you need to make the remittances within 7th of the following month. You need to file quarterly returns. Again, default category also comes under it. After filing quarterly return, you need to issue TCS certificate in 27D to the people from whom, sources. So this is the message that department wants to convey to you. So deduct proper and correct tax as per the applicable rates, remit all those deducted tax in time, file TDS return in time. So there will be no grievances from either side. We have received a few queries from the Chamber of Commerce. So I would like to just go through those, all these queries here. Specifically, first one was with respect of section 194R. What are the challenges in implementing section 194R? So they did not find any mistakes out of 194R, but they are talking about the difficulties in complying to section 194R. So one of the points that they have mentioned is value of the gift is above 50 lakhs. They have to deduct TDS under section 194Q while crediting the seller, and also deduct or pay TDS under section 194R while distributing the gift. It results in double taxation. We like to clarify this, that there is no component of double taxation here, because TCS is not an absolute tax. So whenever TCS has been deducted, the credit is being given. At the time of filing of their return, they can decide whether that is they are falling within the taxable category or not, and pay appropriate tax. That time the credit of TCS will be given to them. Again, the person who has to comply with section 194Q and 194R, they don't have to make any payments out of their pocket. It is the payment that they are making in the form of benefits or perquisites to the beneficiaries that we are asking you to make a deduction. In the case of 194Q as well, so when you are making purchases, you are making the payments to the sellers. So it is the payment that you are making to the sellers that we are asking you to deduct TDS. So we do not find any reason why it has to be told as double taxation. Further clarifications based upon your questions will be taken up. Then next, another issue was TAN inactivation. One particular assessee has told that their particular TAN has been inactivated. If the TDS return is not filed by the TAN holder for number of quarters, the TAN gets inactivated automatically. If there is no transaction and no TDS returns has to be filed, whenever the TAN inactivation happens, you need to approach the AO, and the particular assessee has approached the department, and currently the TAN is active now. Third one is a grievance from a deductee who is suffering because there has been an error from the deductor side. Deductor has deducted the TDS but have not filed the return with appropriate details. So the department is not able to give the credit to the deductee in time. because of which detective has identified this error much later. So the issue has happened during the financial year 11-12. They are approaching the department right now. However, department has taken up the grievance and they're communicating with the director to get the TDS return, corrected, rectified. Soon the detective will be able to get the credit. Similarly, many other grievances in this form of detective issues also have come up. So we have, as CITs are told, we have taken up at a fast pace and we are able to rectify all those issues. I'm sure this particular issue also will be rectified in short time. With this, I would hand over the podium to the next speaker. Thank you so much.
So let me ask our co-chair to introduce me, Dr. P. Sudhakar Naik.
Dr. P. Sudhakar Naik, an IRS officer and medical professional from Osmania Medical College, Hyderabad, holds master degree in public administration, graduate in law and diploma in rural development. He is founder of Sarvodaya Grama Seva Foundation and Sarvodaya Women Entrepreneurs. Sarvodaya Grama Seva Foundation has been instrumental in establishing and running libraries and study centers and sports academies in government schools of rural habitations for enabling rural students to develop their communication and leadership skills. Sir, with this, I request you to take the session forward.
Respected CIT sir, and respected JCIT Srimati Aditi Goyal ma'am, and my senior Shri Krishna Kumar sir, and President of Federation of Telangana Chamber of Commerce and Industry, Shri Anil Agarwal ji. Good afternoon all. This session has been planned, though we were planning to have this session, but this FTCCI has come forward proactively to have this session and has enabled the session to go very smoothly with larger participation. In online sessions, we generally see not more than 100 participants, but here participants have touched more than 150, and that is a very good indication that this section is a grand success. And my senior has taken you all through the provisions and process of TDS, and there have been new provisions also he has emphasized, and your queries have been put on the thing. Now we will address all those queries related to 194R and also with related to TAN inactivation and other grievances. As my CIT sir has told that we are proactive in resolving grievances within 30 days, and also like we are proactively engaging all the deductors who are the main stakeholders in the nation building by way of remitting taxes that constitutes almost 60% of our direct taxes contribution. So as requested by FTCCI, there has been a request that this session has to go quarterly. That our CIT sir will definitely agree for doing this session quarterly also. And now we will go through the queries. I request members, there have been some queries put on chat box. I'll read queries one by one, and one of our officers will be answering your queries, including our ITOs, Sri Madhugaru, Sri Lalita Madam, and many other ITOs are also there in session. So all of us will answer your queries. So first I will take up the queries which are put in chat box, and after that we will open the session for one-to-one query. That is, you can raise your hands in your section. There is a option to raise your hands. So once you raise your hands, we will take those. We will unmute them and we'll ask them to ask the query directly, so that the speakers will get to know about their query. So first, I will take you through the queries which are put up in chat box. The first query is from Vishnu Prakash Kankani. He has written one query. If buyer's turnover is less than 10 crores and 90% of purchases are from one supplier only, whether TDS required to be deducted under section 184Q or not. So here, the section clearly says if the buyer turnover exceeds more than 10 crores in previous year, then only we have to apply this 194Q. For small buyers like small scale industries, this section from beginning it will not be applicable. So on this, my senior Krishna Kumar sir will throw more light. Sir, please throw more light on this. Sir. Section 194.
We are specifically told about the section 194Q. So here there are two conditions when who is the buyer and who is the seller. So on what amount that we have to apply section. So in this case, the buyer do not have a turnover of more than 10 crore, and since it's less than 10 crore, despite being making purchases from one supplier, so they will not have to deduct TDS under 194Q. As you said, the same answer is applicable for this.
Next query is, does one query from Vinayak, TDS on purchases, does GST amount is to be included in 50 lakhs limit or no? So GST is not included in that 50 lakhs only. It is excluding GST.
Yes.
So that is answered. TDS on purchase is applicable on basic or gross. That is on gross amount excluding TDS. Right, sir?
Yes.
Yeah. So that is also answered. Next query is Vishnu Prakash Kankani. When credit for TDS TCS is allowed only when the same is reflecting in 26 years, then why there is compulsory for downloading and issuing form? I think he is mentioning about form 16 or 16. So which is consuming considerable time of professionals and national resources in the form of paper and ink. Here the query is why should we issue quarterly and annually statement when it is already being reflected in 26 days?
It is actually the responsibility of the director to inform the directory that your TDS that has been deducted has been remitted to the government, and the same is reflecting in form 16A. So the credit form 26A is between the department and the directory. So form 16A is between the director and the directory. So directory's responsibility is there that after deducting the tax, I have remitted the tax into the government account on so and so date. I have filed the TDS return as well. So that information has to be informed to the directory. So that is why form 16 is there. So we cannot, correlate 26 and form 16 and come to a conclusion like this.
And we have noted that, sir, there could be several defaults or shortcomings in the returns also.
Yes.
So the moment it is reflected into 26A is only that in the finality.
Yes.
Yeah. Next question is, it is with regard to provision. Do we need to deduct TDS for provisions amount which we have to provide in the books during financial year closing, where certain vendor details are not available? In case TDS needs to be deducted, then which PAN how to use? Please clarify. So this is a pertinent question in every session, sir. And kindly throw light on this. Provision, sir.
So, as we have told, all these sections are applicable whenever there is an accrual in your books of accounts. So you need to deduct TDS when you are making accrual into your books of accounts. It means like when an entry is made into your profit and loss statements, it means that there has been a purchase or sales, right? And the transaction has been completed, expenses has been booked. So that is when you need to deduct TDS. Provisions also, TDS needs to be deducted. So they need to, they definitely know the PAN of the transaction, right? So when expenses is made, purchase is made or sale is made, so they need to use in these non-PAN cases, 20% as I said is applicable.
Next question, sir. What is the solution if deductor is not provided form 16 but yet ITC reflect reflect to 26A.
Hmm.
If it is reflected in 26A, and even if the Form 16 is not deducted, Form 16 is not issued. So it is reflected in Form 26A means that he has already credited.
He has already
filed
got
the statement.
credit. Yes.
Yeah. But Form 16 issuance is a kind of default only. If they are also not issuing Form 16, they are liable for penalty under Section 271H.
Yes.
One issue generally arises in Form 16, it is the gross, basic, other allowances and the net amounts.
Yes.
What happens is if a Form 16 is not given and TDS is what is actually deducted or not, and what is reflected in 26A is correct or not, is maybe certain times issues because of various provisions, purposes and all. In that case, Form 16 is very much required, sir.
After obtaining LDC, still deductors are deducting TDS and remitting to government of transaction fall under NC period. In case, so even after issuing LDC, they are deducting TDS means they are not obliging the LDC. If when there is LDC, you can insist on deduction as specified in the LDC. I mean, whatever the rate is specified, as per that rate, if the LDC is for nil deduction, that has to be that you have to enforce. I mean that you can insist. But some deductors, they are even the LDC is given, they are not obliging the LDC. So in this case, what we have to do, just throw light on that.
See, LDC is given to the deductees, right? So it is deductees. I mean, they can impress upon the deductors after showing the lower deduction certificate. It is for the benefit of the deductees. If deductors are, not obliging as an tax administrator, we cannot force the deductors to go ahead. But yes, we have issued a certificates so they can confidently go about doing lower deduction. We'll go ahead.
Yeah, there is one query. Difference between Form 16, 16A and Form 26 is which one should be considered? So already sir has explained in the slide. Form 16 is annual, issued for salaried cases, whereas at the end of financial year, in the month of June, it is issued, reflecting that his salary, total payment of salary, and what TDS and how much TDS has been done. Whereas Form 16A is quarterly
salary payments,
and non-salary cases, and whatever is there in Form 16 and Form 16A gets reflected in Form 26A when it is correctly filed and reflected.
Yeah, Form 16 and Form 16A will have all those different categories of payments. Form 26A will have the cumulative amount. It will not have a breakup of salary allowances. As one of the members from the Telangana chambers have specifically told, Form 16 contains the details of salary, allowance, perquisites, and other breakup. So the deductee will have an idea about what is his total salary, including the basic allowances, perquisites, etc. Similarly, Form 16A, what are the different forms of payments? Payment to contractor, payment to professional, etc. If it is the same deductee. So Form 26AS will have a cumulative payment amount and the total TDS. It will not have any breakup. So Form 26AS clearly reflects whether you are getting the TDS credits as shown by the Form 16 and 16A.
One question, sir,
after making payment and filing the return of TDS returns.
Yeah. So Anjaneyulu Kamatam has one query. TDS applicability on monthly telephone expenses, whether it should be considered as a benefit in kind, and maybe his query is one with regard to 194R. So kind of telephone benefit given to employer can be considered under 194R.
See, 194R is either in the form of cash or kind. Okay. So when the deductor books these expenses in their books of accounts on behalf of somebody else, so it becomes a benefit for the other person. So if it is
So that
more
is
than
also,
20,000
yeah,
per year, yes, the applicable rates will be.
yeah. If the telephone benefit is more than 20,000 in a month, then TDS has to be done on that in kind.
This, in fact, if it is an employer-employee relationship, this would go into the part of their salary component.
If in case of scrap purchase, if supplier has charged TCS at 1% while booking the same invoice as purchase of scrap, is we need to deduct TDS under 194Q again? No.
So in this case, again, as I have told, 194Q and 206C, for same transaction, if both are applicable, 194Q will prevail. So board has given a clarification in that regard. I have given the circular details as well, so they can just go through it once again.
But here his question might be like that, sir. He has already done TCS under 194, under TCS, no, sir, 1%. Again, they need to do it.
His question is on same transaction where both sections are applicable. So which section will prevail? That is what I'm trying to tell.
So what he is trying to say, already TCS is deducted. And you are saying that 194Q will prevail. So what is the situation in that case?
In case of
So
scrap, if supplier has charged TCS at 1%, right?
Yes.
While booking the same invoice as purchase of scrap. So it means like for a buyer, 194Q is applicable, 206 is applicable from the seller's side, correct? So what I'm trying to say is the same transaction, both this section comes into play, correct? So who will do the needful? Who has the more obligations? I'm trying to say 194Q has more obligations than 206C.
And detailed query can be mailed, sir.
Yes, yes.
Yes. Any other query? Whatever queries here in chat box, we have already replied.
Sir, here one important query which has come from K. Neeraja Devi, which relates to TCS is deducted if the amount transferred from his NRO account to his NRO account abroad for his maintenance purpose. LRS, the basically issue relates now to with the related. Because education and medical, two are the purposes, no? So self to self account, this is a transaction.
NRO to NRE account is, I think, exempted, sir, right, sir?
See, if it comes under LRS and if the purpose is specifically mentioned for medical and education purpose, we already know that whatever is the applicable rates, 0.5% and 5%, that already is prevailing. There is no change as it is. Okay, the change has come for all those categories of payments for foreign travel and making purchase under making real estate purchase or stocks and securities abroad. So only the changes has come there.
Is TDS is there for a brokerage or commission agent for search of property? This is the general question, sir. Is TDS applicable on telephone expense? We have covered, sir.
On this brokerage and commission on search of property, it is there. It is clearly
194H is applicable.
Yeah. Telephone expense incurred in business operations.
Sir, we have covered already.
Sir, here the question is telephone expense incurred in business operation. If it is a reimbursement, it does not come under 194R.
Yes, it does not come under 194R.
Reimbursement does not come under 194R.
Basically, we are talking about the perquisites in cash or kind, which is flowing, and we wanted to see that it is not goes escapement of income or I feel so. The government has introduced with that intention of widening of the deepening of the tax base, which you have mentioned earlier. Here one, but definitely, sir, in respect of several of the 194R, is it a back entry of gift tax? People are asking, because is it not a transaction tax also?
See, 194 section 194R particularly has been introduced to find the trial. So there are like a lot of distributors and people are taking benefits in the form of kind, travel abroad, entry into the event, different forms of perquisites given. Correct. So their expenses are booked on one side, whether the other side, offers for tax or not. That's the whole point here. So we wanted to, track the trial. That's all. So if you are not falling under taxable income, definitely you will not be taxed and you will be given the refund. So at the time of filing the refund, you can take the credit of TCS. It's not an absolute tax, right? It's only a part of it that we wanted you to direct and remit to the government. At the end of the financial year, definitely, yes, we are giving the credit to them. So when their income goes beyond the taxable amount, including the benefits, then, tax slabs will be applicable for.
What happens, sir, in many of the distributor channels or medical representatives or etc. I hope, or I want to understand from you whether the government is trying to see that the companies are booking the expenditure as a business expenditure under section 36, whatever. And the persons who is receiving, whether in cash or kind, they're not showing. That's why the business oblique profession is added, sir.
Exactly.
అంటే మెడికల్ రిప్రజెంటేటివ్స్ చాలా డాక్టర్స్ కి వెళ్ళి అక్కడ వాళ్ళకి గిఫ్ట్స్ ఆర్ రెమ్యునరేషన్ ఇన్సెంటివ్స్ ఇస్తున్నారు. ఇక్కడ కంపెనీస్ వచ్చేసరి ఎక్స్పెండిచర్ అని బుక్ చేస్తున్నారు. అంటే
బోత్ సైడ్స్
వచ్చేసి దే ఆర్ నాట్ షోయింగ్ యాస్ ఎ ఇన్సెంటివ్ ఆర్ ద బెనిఫిట్. ఇస్ ఇట్ ద పర్పస్?
Yes.
But when it comes to the real business, for the expansion and penetration or doing the business, they have to organize meetings, they have to give the gifts, they have to do incentive to promote business, no, sir?
No, department is not saying that it has not to be done. Only thing is like we wanted to track all those, particular transactions, right?
Okay. So,
what is the limit to deduct the TDS on cash withdrawal from bank? So it was explained in the slide.
Section 195.
Yeah, more than 1 crore TDS is applicable.
Yes.
And in case of non-filers, it is more than 20 lakhs.
20 lakhs, yes.
So Samamurthy has one issue which we have told in the introduction regarding.
Sir, good morning, good afternoon, sir. It is a correct time to hold such meeting because lot of people are saying because 31st is the last date for filing the returns. So whatever they can correct now, they can learn and correct so that defaults won't happen. So with this, I want to have 2-3 queries, sir. First query is TDS is applicable on advances for purchase of property when it is paid in installments. But when you are filing and issuing the TDS certificate, is shown as sale of property only. Thereby, what is happening, sir? It is getting reflected in 26 years as sale of property. Under the CPC, while processing the return, they are telling they have not disclosed this income. Hence, we want to proportionately allow TDS. For this, kindly find some solution, sir, because there should be specific mention that is for advance and it is getting carried forward. We have mentioned in the return of income also it is carried forward because the sale is happening in the next following years. But CPC is holding the refund, stating that you have sold 3 properties, but you have shown only 2 properties for taxation. 3rd property is not shown. That is only advance. So there should be some provision that it is advance and it will be taxed next year when it is sold. For this, kindly see some solutions, sir. Either there should be a clear this thing between the TDS and the CPC processing because there is no provision to explain also. So many refunds are getting pending because of this and there is no portal to explain them. There is no grievance to explain them. That it is the TDS on advance which got fruitful in the next year. The sale deed is executed, we will be claiming in next year. But earlier year refunds are kept pending. I think you have understood the problem.
Yes, yes. We make note of your query. We'll come back with an appropriate reply for this query.
And one more thing, sir, TDS is paid as per some agreement in some flats for a higher square feet. Subsequently, what happens, sir, there will be change in this thing. They have paid and subsequently they have changed because suppose they have agreed for 3,000 square feet, subsequently they have agreed for 2,000 square, they have taken 2,500. So there's difference in the sale deed amount, sir. The advance paid is 3 crores. whereas the sale deed happens for 2 lakhs 50,000, 2 crore 50 lakhs. That 50 lakhs, what is the procedure? Kindly explain, sir.
I'll take note of all your questions.
Okay,
In
sir.
respect of these real estate transactions, we'll try to get
Okay.
back to you with the appropriate reply on this.
And one more clarification, what we require is an NRI has sold the property. TDS is deducted at the applicable rates, that is 20% or 30%.
Right.
Now NRI wants to take back the funds, whatever tax suffered funds. Now the banker is telling that more tax is to be deducted because when you are taking the funds, the tax is to be deducted. Whether it is correct, sir, because already tax suffered funds only he is taking. After 20% or 30% suffering, balance left over 70 or 80% only he is taking. On that also you are taxing, means it will become double taxation. So kindly take note of this point also, sir.
Right, right.
And one more request, sir. In the case of TDS of e-commerce operators, they will deduct TDS at the time of payment to their vendors, sir. Now vendors are paying commission to these TDS operator, e-commerce operators. These vendors are not aware that when they pay commission, they have to deduct TDS. This awareness has to be established with e-commerce operators, sir.
Okay.
Because e-commerce operators, what they are doing, they are deducting tax and paying the balance, but they are not making aware the vendors that you should also deduct the commission on TDS.
Yes, yes.
TDS and commission. Thereby, what is happening at the time of audit, we are forced to make the deduction, and it is how difficult to communicate with e-commerce operator, you know, sir. So there should be some general awareness that e-commerce operators should make the vendors also aware that on commission you should deduct TDS. That one I request, sir. Yeah. And as you told, whenever there is something, apply to assessing officer for refund or any this thing you are telling. Who is the assessing officer, sir? TDS CPC or the local assessing officer?
You need to apply with the local assessing officer.
Local assessing
officer.
Okay. Okay, sir.
In case you are making any rectification with the online filed returns, that will be directly taken up by the CPC. But if there is any difficulty in doing so, you can always approach the jurisdictional assessing officer. Sir,
last query, sir. This TDS is paid on wrong TAN, sir. Now they want to change the TAN number. The TANs are available with the 2 different officers, sir. So to whom we have to apply, whether the wrong TAN officer or the correct TAN officer for TDS TAN correction in a challan?
You need to apply with the jurisdictional officer who is holding the correct TAN, telling that we have filed with this particular TAN. We need to rectify the challan and the TAN has to be rectified so that credit is given to the right TAN.
Okay. Thank you, sir. Thanks a lot.
Sir, kindly throw some light with your experience and the cases which come, especially on this TAN mismatch, section mismatch, or head of account mismatch, or bank something year assessment year. These are the general which we notice because of the ignorance or some person who is a deductor and filing because they do not know. So many times what happens, they go to some agency or somewhere and they, instead of one section, they remit because TDS, TCS are inconsequent into purchase like TDS. In some cases, it is TCS. In some cases, so when they go with the deductions and the heads of accounts, but the remittance made or the filing made by the agency in wrong heads are happening. So what is the solution from your end which you suggest to the chambers because of a assessment here, wrong head of accounts or this wrong mentioning of the TAN or PANs? Kindly advise us so that we can advise our members accordingly.
Before we proceed, I just want to interject for a second that our previous member from Federation had given a couple of queries and difficulties. What I would suggest is that particularly on the property transactions, domestic as well as with the NRIs, just put it in a form of an example with some numbers, so that the query can be understood from the exact difficulty what is being faced. And Yeah, some issues are pending with the CPC Bangalore, where the income tax ITRs are being processed. And some issues are concerned to CPC Ghaziabad, that is in New Delhi, which the TDS returns are being processed. So there is a share of information between the two agencies, and then certain procedural issues, as you told that sale of property is the nomenclature or the nature of transaction, which is being, but it is in advance in nature in reality. So these kind of issues, if you can put it in black and white and send us on that email, definitely we will take it up at the right forum so that we can address on that. Yeah,
Thank you
Krishna,
very
on
much.
this, yeah, Krishna, on the mismatch, you can.
Sir, we have briefly given the responsibilities of the directors, about filing the TDS return. So particularly, we have emphasized on filing a correct TDS return. So these are mostly factual information, say wrong TAN or filing wrong factual information about the directees, which results in a lot of grievances. We are trying to repeatedly say that when director is filing their return, they need to check it more than once to ensure that all the factual information that is filed in the TDS return, because most of all those filings is getting processed through the system. And as you know, we are trying to build a foolproof system wherein we don't want to, make a mismatch at the time of processing. So while filing the TDS return itself, if you can ensure that all those informations are right, so the problem of mismatch at the level of director directee will not come. Yes, we are available all the time for addressing your grievance if there is any mismatch or all those things. But to avoid any mismatch or grievances, prevention is the best, is what we would like to address from our side actually. So again, yes, we have shared with you mail IDs. Apart from all those grievances between directors and directees, like specific reference to the provisions or any difficulties to follow or comply to the provisions, you can always mail us and we would be happy to reply to you within few days time.
So may I request you, sir, for one solution, like when we make a payment for a direct tax challan or GST challan or anything, we get a sort of a screenshot that these are the, you are going to make the payments or you are proceeding with that. So what happens, the data is very large, various sections are applied, and the agencies are doing these works many times, and they have to forward through NSDL, etc. Is there a possibility of receiving before uploading or anything to cross-check via mail to the SSC himself on the screen from the department side, so that both the ends are satisfied and this recurrence and prevention can be done? Can there be a possibility? Shall we give in writing a proposition?
To enhance the portal wherein you want an utility sort of thing where you will fill all the data, you reconcile again, then come back and filing sort of, correct?
Yeah, sir. So that, if a mail, because a mail, other things are available of the real SSC and or MDs or etc. So it
such a possibility is of, I would say, is a remote possibility, because the system, when you put a particular assessment year, for example, if you take assessment year mismatch, if you are putting an assessment year, the system would not know whether that is a correct assessment year or a wrong assessment year. At the same time, let us take PAN mismatch. If you put a valid PAN, but that is not the PAN for the transaction, system would not know whether that is the PAN which you intend to put or not. So the utility, what Krishna Kumar is suggesting is, again, I think the possibility is very difficult, because out of some 40-50 crores of PANs which I have, if I have to check the PAN which you are giving me is correct or not, it will, the deductor, deductee, everybody will lose a lot of time. So I will not, say that you don't suggest that, you suggest it, but as on today with the available systems, I don't think that is possible, because the most important thing is that the deductor has to be very much aware about the assessment year, because we are seeing some of the seasoned deductors who have been filing from a long time have written financial year in place of assessment year,
Very true.
which is a very common mistake.
Very true.
Because what they get confused is previous year, financial year, assessment year, preceding year, succeeding. So many nomenclatures are there. So they do get confused on that. But these errors are very much rectifiable. If they human error is possible in such things, but then these are all rectifiable. But thinking of a pre-utility where we can do the checking or pre-loading of the data, particularly for TDS, is very difficult. But ITR, yes, income tax return, we have the PAN, we have already the 26AS data with us. So some kind of pre-verification is possible. But on TDS, I think we need to rethink. Yeah, Krishna, you can.
Yes, sir. That will be the right reply for the questions.
What happens, sir? Ours is a federation wherein MSMEs are technocrats. They are not, their offices are somewhere, factories are somewhere, and compliances happens, and they delegate whatever there is to the agencies. They are not well versed. So definitely we have to make them aware. But at the same time, if by chance, which has occurred in the past for deposited one amount in another head of account, because so many it runs, no, sir. So they can approach to the department. That is what the message we can give to them now, sir. That whatever the issues are there, they can collect it through FAPSI, through Federation, or directly through your mail. They can make it. If any still shortcomings are there or anything is there, definitely we can work jointly, and something like a clearance sale or a clearance of all these issues we can have involving our CPC Gurgaon also if required. That is what I can expect from both department, because we are in the middle, SSEs, and so that we can help them together.
Yeah, actually one question is there, these many provisions and deductions, how can MSMEs comply with them? This query. Actually, these many provisions are there, but MSMEs will not require to follow all these compliances. For example, small scale industries, they generally do payments, their payments are not, their turnover is not exceeding 10 crores. They don't need to follow 194Q. And their payments, if their turnover is not more than 1 crore, they don't need to follow a lot of provisions of income tax, because they are less than 1 crore turnover businesses. And in any case, they may be required to follow 2 to 3 provisions, like 194C or 192, or at max 194J. Like these two, 3 provisions will be more required. And for these things only, we are doing awareness sessions. We are regularly doing awareness sessions among MSMEs also, among startups, among the various stakeholders, involving the financial and accounts officers. Like we are not calling regular people, general people. We are targeting the deductors. And we are asking the MSMEs to send their deductors, like who is involved in taking care of the finances and taxes. So we are asking them to send. They send those employees only for these webinars or seminars. We have done a lot of seminars last year, targeting the MSMEs, mainly MSMEs. So in those cases, like MSMEs can easily follow these compliances because their provisions, they have hardly 2 to 3 provisions which they need to follow.
Sir, only one last question, sir, which has just come. That in respect of banks, there is a provision of PAN, not PAN, returns filing, especially returns filings last 2 years, 3 years, etc., and the deductions will vary under section 194(1). Again, but the banks without for the persons who are regularly filing regular returns also, the moment it is crossing 20 lakhs, they are starting and deducting the TDS. So what could be the message to those deductors?
here you have to emphasize on the provisions of the section. If the regular filer and if they are still insisting after 20 lakhs will do TDS, means they are not correctly following the provision. So here department role is, it is your role, it is your responsibility to tell the bank that this is the provision. And
So
as per the act,
the SSC has to show them that I am a regular filer
Yes.
and the such
Yes,
provision is
yes.
not applicable to me.
yes,
Ah,
yes.
Sir,
If
we are, sir, madam will tell you many things, but before that, really it was very, very enlightening and enriching for all of us that you have taken all the patience despite our time running out, and you have taken all the time, and we never felt that we are not on physical mode. We are so live, and you could see the participants also that they have not left, and everybody was on the chat box also. So our president also has again requested that if we can have in next month a physical seminar, so that we will also collect all the real issues, so that we will send you the real issues in time on the mails, and we will also collect and we will meet. So president is available, sir. Kindly, president sir, will you just
Yeah, sir.
before
Thank you, sir. Let's have
Sir.
one physical meeting also, sir, so that we can. There will be issues. Always there will be many issues will be there, which can be solved physically also. So it's my request. Let's have a physical meeting also.
We will
Because,
definitely have one more meeting, but let us see. There are so many other organizations which are lined up asking for the webinars. Depending upon the schedules, we will communicate to you about the physical meeting.
Okay. Thank you, sir. Thank you.
sir, it was a great pleasure interacting and listening, and from the direct శంఖంలో తీర్థం ఉంటది అని అంటారు. సో ఆ విధంగా మాకు అనిపించింది అనమాట. సో మోస్ట్లీ ఆల్ ఆర్ BTech engineers, civil engineers, doctors who are in this field. Madam Aditi Goyal is also BE, and Krishna Kumar too, and Dr. Nayak is also. It was really, really, I must say, tax is definitely not a thing to be cherished, but it is enjoyable thing if you comply voluntary. And always it is a saying that file, smile and go. So I request all our MSMEs and things that the government is very, very proactive and they want voluntary compliances. And if you have any issues further on applicability of law or compliance or anything, they are always available through mail, in person also, and Federation is also available. We have several secretariats over spanning on several issues. You can be a member or non-member, but if you are a member, you can get the several benefits and interact through on issues, not on individual issues. So on individual issues, you can send us, we will take up with the department, and they are always ready to interact and solve the issues. As Meghnaji has told that 95% of the issues have been resolved in 30 days. So that is a very, very commendable job, sir. And really, we thank you for that. And we look forward for the same support and guidance from your end, sir. So we once again, thank you, sir. We'll come and meet you once again personally, sir. Thank you. So I request Madam to kindly propose a vote of thanks. She has been doing wonderful job. I thank her also.
On behalf of FTCCI and my behalf, I'm thankful to the Commissioner TDS and the senior officers of the department who has readily accepted and give their valuable time and clarified number of doubts. I'm thankful to the participants also for their patience hearing, and once again thank you the department for their valuable guidance and clarifications provided to the participants. We look forward to many more interactions with the department in future also. Thank you. Thanks a lot to everybody.